Our supply issues are here to stay. How to profit from it. Hello and welcome to the StockPlanner Channel. Today I want to talk about a transportation ETF, which I feel might be worth taking a look at, especially since we're facing several transportation issues in our country. And by the way, our country is not the only ones that are facing this. Just taking a look at our empty shelves in our grocery stores and at Walmart, the transportation sector has been broken for some time. That just-in-time supply chains that Walmart uses and our automobile manufacturers use is just not working when their ports and parts that we need are backed up. And our ports infrastructure is aging. Lack of qualified people to work. Nobody wants to work anymore. And our roads and rail infrastructure needs to be improved. The recent infrastructure bill may help with some of these problems. I sure hope so. With all these problems, what can I do about it? Well, there's not much I can do about it. A lot of this is corporate greed and government missteps. But maybe I can capitalize on it, make some money. There's an ETF out there, a basket full of stocks that all deal with the transportation industry, airlines, rail, deliveries, businesses like FedEx. And they're all put in an ETF called IYT. That's what we'll be looking at today. And we'll try to determine if this ETF is a good investment. Typically, I like to do a lot of individual stocks, but since we have a lot of volatility in the market and the ETFs are actively traded for long-term investments, I'm looking towards an ETF. Before we get started, I want to tell you that the StockPlanner Channel is an education channel. We're sharing our ideas and learning about swing trading, looking for the tops and bottoms of the market, the swings, the major swings, and capture the trend between it in order to make some money. I'm sharing my ideas because it helps me become a better trader, and sharing my ideas I hope help you become a better trader. Doing this analysis, planning out my trade, and telling you about it has slowed me down and made me a more consistent trader. And I'm engaging, which has helped my understanding of certain areas where I was weak in, and still weak. That engagement is important, so I hope you leave a comment or suggestion below. That's the way you can learn. It's very important to do your own due diligence and take responsibility for your trades, but also you should develop your own system and not follow somebody else's, because once you learn your system, that's when you can start winning and making some serious bank. Now let's get started. I believe, and others believe, that the supply chain is never going to back to normal. Over the next 10 years, we're going to have a lot of issues, one issue after another. There's an interesting article by Greg Fuller. He's a CEO of FreightWaves, and he says that supply chains are never returning to normal. He believes that the supply chains will be in a constant state of disruption for the next 10 years. And that's because we're going to have a lot of possible wars, government turmoil. A just-in-time supply chain network works great in peace, but not in war. There's other disruptors like lack of qualified people, and we have some environmental issues forced upon the transportation industry. This go green is going to cost more money and time that will surely be passed on to the consumer. I can't see how that will help inflation or recession. Tightening supplies, higher energy costs, heightened geopolitical risks, war, aging transportation networks, and this is going to help advance supply chain technologies. All those factors are going to affect the transportation industry. Technology. I like that idea. And he goes on to explain the various different prepositions that he has, the labor issue. But the bottom line is there's going to be issues for the next 10 years in the transportation industry. Those are headwinds. And you'd think that the transportation industry stocks would go up, especially since Congress has thrown $1.4 trillion towards it and more. That should be good for transportation. Do you think we're going back to normal, or do you think we're going to have problems? Certainly we're going to have problems this summer. Well, Shanghai in China has finally opened its ports after 7 weeks of lockdown. These ships are backed up, ready to go, or ready to be unloaded as well. But in case of the United States, 10 ships are coming here, and they're all going back empty, all but one. Because of the supply chain issues, we have we haven't really felt the full impact yet. We'll feel that this summer. When these shelves will start to get empty, consumer sentiment will go down. I think the stock market will go down too. I'm not positive on this ETF though. Well, it's good news that Shanghai is starting to open up. That's the major Chinese port, and things will start moving, but that'll create some bottlenecks here in the United States. And those bottlenecks are expected later this summer. That's a neat picture. Like it. The trucking and rail industries will be affected as well, and prices are surely expected to go up. In the last few months, they've already increased by 30%. Another problem we'll have with this supply chain infrastructure situation is a lack of qualified labor, especially at the ports. 77% of U.S. professionals working in the supply chain and logistics business are threatening to quit. And the reason why they're quitting is stress. They feel like there's better opportunities elsewhere, and some people don't want to work. Article written by Juliet Roswell, and it says the supply chain companies are failing to retain vital workers. There's your 77% figure that I used, and there's a lot of reasons why they're leaving. So expect employee movement in the next few years. That's not good for the industry. Another problem that we have is our ports need some structural improvements to handle the sudden influx of goods. There needs to be introduced some technology. I live in Norfolk, Virginia, and I just read an article where we're widening and deepening the port access to the Norfolk port. With the infrastructure money that Congress approved, it may help our aging infrastructure. I believe it's time to get serious. I believe that our supply chain issues will continue for some time. Do you? Leave your comments below. I'd like to hear your opinions. If you don't agree, what is going to make it change in the next 6 months? Will our government wake up suddenly? Again, according to FreightWays CEO Craig Fuller, and in his article, he lists out a long list of threats over the long term, and I do agree with him that this isn't a long-term problem, and it's very wise to put this ETF, IYT, on your watch list. Now, who's going to be hurt from this issue? Everybody will be. Retailers, both large and small. The big retailers are going to get taken care of first, the small ones a little later. But the lack of goods and the increased cost of goods will add cost to the price of purchasing, add inflation, and I think the customers will start cutting back. Whatever costs the trucker, the train, the ports, Walmart, they'll all pass it on to the consumer. That's who's going to be hurt. And while I believe the supply chain issues will continue for many years, I think that the stocks in the supply chain and also the ETF IYT, FedEx, Delta will have a slow grind down for a little while, maybe till summer, and then I think it'll level off and go back up. That's when the money from the infrastructure bill starts hitting and people start profiting from it. Our roads need improvement. Our bridges need improvement. We need a qualified workforce that stays on the job, that's trained well and paid well. Our rail and transportation infrastructure needs to be improved. In China, they're spending lots of money on rail and also on high-speed rail. They add 8,000 new interstate roads every year, 8,000 miles of interstate road every year. And somehow we have to find a balance between our environmental concerns and the costs and issues to go green as fast as everybody wants. There's got to be a balance. And all these need to be addressed in combination in order to fix our supply issues. Empty shelves are here to stay for a little while, maybe up to 10 years. So if I understand the situations, understand a long-term situation where we're going to have supply issues for the long term, how can I make money based on this? Because that's the object of this channel. The ETF IYT contains the following transportation industries. It's 95% made up of transportation, a little bit of finance. There's your technology services. Technology is where I think it's going to cause the most amount of change for the infrastructure and ports and roads and efficiency of our ports. It's going to be technology. But that's for another ETF. It's invested in companies like Union Pacific, rail, delivery, rail, Delta Airlines, transportation, Old Dominion Freight, trucking, Uber, people transportation and delivery. Looking at this set of, this is top 10, looking at that set of industries, do you think if we have a recession and increased inflation, will these go up or down? Will people travel more? Will people buy more? Will more goods get shipped? And this is where I'm a little bit iffy. As I said, I think these industries will go down a little bit and then come back and turn around. I also feel that while these industries are affected by inflation and a recession, they're all strong industries that you need to have when your economy eventually turns around. Let's take a look at the ETF on a stock chart using TradingView. Now, I'm a swing trader. We're looking at the swing trader looks for the tops and bottoms and captures the trend in between it. If I could do that successfully, I would I'd make some serious bank. Looking at TradingView on the daily time frame, and we could see that recently IYT transportation has been in a downward swing until today. Right now, the zigzag, this is a zigzag. It plots these tops and bottoms perfectly. See that? Right now, it doesn't know what it's doing. It's thinking it might like to go up. The zigzag is a perfect indicator, but it only does that because it looks at the future data and then repaints itself to be perfect. That ain't going to do us when we're trying to make a decision. We need indicators that don't repeat themselves and stay true after they hit. And so I used a zigzag to kind of see, well, that's a downward trend. What indicators predicted that? The MACD is above the zero line. That's the MACD. The stochastic RSI was above the 80 and came back around. And the RSI was above the 70 and came back around. And when they all came and happened within a few bars of each other, that's a sign to go down. It's the opposite for an up. Right now, you have the MACD below the zero line. That's good there. Check. The stochastic RSI looks like it's trying to come back around. I don't know if it has. And the RSI is below the 30 and came back around. And when they all occur within a few bars of each other, and maybe it's a couple more days, that's a sign to go up. I'm not sure we got this yet. I usually wait for the stochastics to come back around. It's not quite there yet, but is the IYT going up or down? Has it bottomed out? Is this a support? Is this the resistance? Well, I kind of feel it's going to hang in this area for the next few months between 235, and something there. I can't see what it is. Let's get rid of this. 235 and 214. Let's make it 235 and 215. Let's see what we can do on having sort of a neutral play for the next few months. So looking at option strat, I type in IYT. I choose from many different strategies here. This time I'm going to use a calendar put spread, and I'm going to have this close on the 17th of June, which is about 26 days, about a month. This currently is at 223, 224. If it stays at 224 for those 23 days, I'm going to take about 413. In other words, let's take a look at the graph. If it stays about where it's at, I'm going to take a lot of profit. It's going to cost me. It's not a credit spread, it's a debit spread, $255. It's costing me $255 to play with a potential profit of $450. That's if it hits there. But if it stays between 215 is what I said, and 235, it's 238 there. If it stays between there, I'm going to make some profit. And if I'm just only trying to make $25 to $40 profit and try to keep it at around an 8% loss, I risk losing around $70. I could take an early profit around $25 to $40. And if it was $25 on a $255, that's about 9%, 9-10% on $25. And this is, if I go for 40, I got 15 or 16%. That's fits the requirement. But I also could go for this max profit. It's worth the risk to me. Is IWT going to move up or down quickly in the next 30 days? Or is it going to move slow grind down or slow grind up or stay the same in the next 30 days? That's where I think it's going to happen. I think it's going to be a slow grind either way. And if it's a slow grind down and it's at 223 and go to 219, I have all these opportunities for profit if it's slow grind down or slow grind up. I like this trade. What do you think? 215, 238. We'll stay in between here for some profit. Cost you 255 to make around, I think it was 460, but only making around $25, $30 will give you 9%. Well, that's what I'm going to do. I'd like to hear what you think about this trade. Put it in the comments below. Like and subscribe. Do your own due diligence. You have to learn how to do a little bit of analysis and technical analysis, but you don't have to be perfect at it. And you don't have to know everything about the stock, especially in swing trading. It's forgiving. Anyway, like what you do, and I like what I'm doing. We'll catch you on the flip.